Let's continue the conversation on Canadian financials. David, great job so far. Let's bring in Ernest from St. John's. Hey, Ernest.
Thanks for taking the call. Look, I've been buying stocks. The bank stocks are 40-odd years, and I always followed the premise, you buy the lower one on the totem pole and, and so on and so forth, and hence we'll come to Nova Scotia, which has dropped about 12 to 15% in the last 12 months. Question is, do you see Scotia coming back that 12 or 15% in the next 12 months? And if you had a stop on Scotia, where would it be? Thank you very much.
All right, thank you, Ernest. So he knows the banking sector quite intimately.
Yeah, so Ernest, you're correct, right? From the highs, it's down about 21%.
Yeah.
Here's my premise. When I make investments, I want to find the theme that is working in the market, and I want to buy the best company I can buy. When the market starts to rally, the first stock to double is the first one to double again. Okay? When you are the leader, you're having an easier time hiring the best employees. You have the lowest cost of capital. The leader stays the leader. And Scotia is having a harder time. I don't agree with going out to buy the weakling in the group, hoping that investors will come around. So we talked about TD. I think TD is really attractive. I think Scotia is having a hard time on a relative basis. And frankly, having taken out 68.40, which was a low from back in May, I just think it's weak. I'd just be a little more cautious here, and I would go move to strength. Always move to strength. Move to the strongest company in the group that you can find, which is why we talked about J.P. Morgan earlier.
Right. Pick their leaders for a reason, right?
Yeah.
Okay. Let's get back to the phones, David. Bring in Carl from Surrey, BC. Hi, Carl.
Yes. Hi, Anita and David. David, could I have your intake on iRhythm Technologies? I believe that was one of your past picks sometime.
Yep. We did, sure. So iRhythm Technology is a company that we've owned in the past. It's in the medical devices space, certainly, and they have a device that basically records and looks for arrhythmia in the heart.
Okay.
And uploads the data to the cloud. Stock had a great run from sort of $20 to $100, and really since September of 18 has been consolidating that. So it has become more volatile than I'm comfortable with. As I mentioned earlier, when something starts to back off and back and fill, I'd like to see the market start to tell us it's making a turn, and that hasn't done that yet. So during the period of time where it's been sloppy on the chart, the revenues are growing very nicely, the earnings are coming around, so I think that that's great. So it's kind of growing into its share price. I would be interested in buying the stock if it traded and it's higher than where we're talking about now. I'd like to see it trade through sort of $85 or $87, which would, to me, point to the fact that a new uptrend has begun, but I'd wait for that to be established first.
Okay, David, thank you. Let's bring in one more caller before we. Okay, actually, let's take a closer look at the chart for iRhythm before we exit. Get to our next call. Any thoughts here?
Yeah, it's just a very sloppy chart.
Yeah, I was going to say, a choppy chart.
And if you were to put up Edwards Lifesciences against that, you're going to see a very different picture. So put up EWC. If you can do that, you're going to see that Edwards Lifesciences, has continued to be very strong, continued to beat the estimates, and
wow.
that's not what we're talking about. EW. EW is the symbol you're looking for. So it just turns out in the very short run, some of the folks in the stent business and the knee business are doing a little bit better.
Okay, guys, are we going to throw up EW? All right. Yeah, if you take a look at this chart, certainly you see some upward momentum for sure.
Right.
Up 45% on a 1 year.
Yeah, so the difficulty is on something like iRhythm is that when a stock breaks down and it gets very sloppy, you got a lot of investors who are trapped at higher levels.
Yeah.
And it's a normal thing for people to say, well, you know what, if it just gets back to my entry point, I'm going to be a seller. So you got a lot of built-in sellers.
Yeah.
And if you're in a good market, you like to see, you own companies that have continued to make investors happy because they're not interested in selling. So I'd rather stay in the stronger names.
Okay, let's wrap this up with a behemoth, especially in the retail side, e-com side. We'll bring in Bill from Beaverton, Ontario. Hi, Bill.
David's thoughts on Amazon? Does he own it, and would he buy it? Thank you.
Sure.
All right, thanks, Bill.
So, Amazon consolidated, put in a high in December of 2017. It chopped sideways through the course of the year, came back and made a new high, and it just pulled back off this high. So if you were to look at Amazon, it looks a lot like a lot of consumer stocks, pulled back over the last 2-3 weeks, and I think that the U.S. consumer's in great shape. I'd be a buyer of the stock here.
All right, at 17.58, it'd be a good opportunity to get in.
Yeah.
Okay, this stock's still under a lot of pressure today. We are seeing some upward movement with stocks today. This one certainly bucking the trend, off about 0.5%.
Yeah, look, it's trading right on.
Yeah.
It's rising 150-day moving average.
Okay.
It's got great support in here. It pulled back in May to 1672, sitting at 1760. I think it's a good entry point. I think you're likely to do well with the stock over the next 12 months.
All right, David, thank you very much for that. We're coming back with David Burrows. He is the president and chief investment strategist of Barometer Capital Management. We're on North American large caps. We will continue with your calls next.